AI feels unstoppable right now. Everywhere you turn, every app flashes AI-powered, like it's a magic badge. Every company is promising that AI will change the game, transform industries, and disrupt everything you thought you knew. Investors? They're throwing billions at it, hoping to catch the next big thing before anyone else. It's a gold rush, and nobody wants to be left standing on the sidelines. But here's a critical question that keeps getting glossed over. Is this genuine, lasting growth? Or are we just watching another bubble swell up before our eyes? With all the excitement, it's easy to forget how quickly things can turn when hype outpaces reality. So let's cut through the noise and get to the heart of the matter. What's an AI bubble, anyway? A bubble is what happens when excitement and speculation outrun what's actually possible. People don't jump in because the tech is making real money. They jump in because they're afraid of missing out, and everyone else is doing it. Prices and company valuations shoot up. Expectations go wild, untethered from what's feasible today. Everyone bets that, eventually, the future will make up for today's losses and justify all the risk. This is what people mean when they talk about an AI bubble. It's a cycle we've seen before with the dot-com boom, crypto, and even housing. When hype becomes its own fuel, danger isn't far behind. Why does AI feel so big right now? AI didn't spring out of nowhere. Years of research and incremental progress led to breakthroughs like ChatGPT, which suddenly put advanced AI into millions of hands. For the first time, ordinary people could interact with a machine that felt almost human. Chatting, writing, reasoning, creating. The sense of magic was hard to ignore. Adoption exploded at a pace we've never seen with new tech. Suddenly, every company felt the pressure to experiment, integrate, and announce their own AI initiatives. If you weren't investing in AI, you looked obsolete overnight. Investors saw echoes of the early internet, something transformative, something that could reshape the entire economy. Nobody wanted to miss out on the next Google or Amazon. So they piled in, funding startups and established giants alike, even if the business models were hazy. The cost nobody talks about, what tends to get lost in all the hype, is the staggering cost of making AI work at scale. Training and running large AI models isn't cheap. It burns through massive amounts of electricity, requires endless racks of powerful servers, and depends on rare, extremely expensive chips. These aren't theoretical costs. They're baked into every interaction you have with an AI-powered tool. And here's the catch. Many AI companies lose money on every single user. The more people flock to their platforms, the deeper the losses run. Growth doesn't always mean profit. It can mean bigger bills and higher risks. There's a real possibility that today's rapid adoption is masking business models that just don't add up long-term. So why is the money still flowing? If the costs are so high and the profits so elusive, why does the money keep pouring in? Part of the answer lies in the psychology of the tech world's biggest players. The giants, Google, Microsoft, Amazon, Meta, are all acutely aware that missing the next big platform shift could make them obsolete. None of them knows which AI tool, startup, or approach will win, so they hedge their bets, investing in everything and everyone just to be safe. For these companies, losing billions now is a price worth paying if it means staying in the game. They'd rather suffer short-term pain than risk getting left behind when the dust settles. This kind of fear-driven investing is a classic ingredient in sustaining a bubble. That's what keeps the bubble aloft, at least for now. Uncertainty, fear of missing out, and the hope that the winners will justify all the risk. Will the bubble burst? Bubbles don't burst just because there's hype. They burst when the money dries up, when trust evaporates, or when some crisis exposes the distance between dreams and reality. For now, the cash is still flowing, confidence is high, and no disaster has struck. So the AI bubble keeps expanding, drawing in more money, more companies, and more believers. But make no mistake, markets can turn fast. If it becomes clear that most AI companies can't translate technology into sustainable profits, or if a major failure shakes public trust, things could unravel quickly. The question isn't just when the bubble will burst,